Next up, we have an amazing panel. And speaking of the infrastructure and who is building it when it comes to tokenized assets, that's what we are going to discuss on stage, especially putting it into the light what we just heard from Christian. It's quite interesting that these new rails, those containers, who is building those, on which layer of the stack, and who is here today, and who is going to be here tomorrow. So please welcome on stage. I would like to announce we'll have on stage, first of all, Rafael Mastroberardino from Franklin Templeton. Please come on stage, Rafael. Next up, we have Carlo Mondani from SIX. Welcome on stage. Right after, we have Dr. Lidia from BX Digital, Seturion. Last, definitely not least, we have Robert Oleschak from the Swiss National Bank. Please come on stage. And the panel will be moderated by our one and only Emmy Lorincz from the Crypto Valley Association board, former president of the board, and who works for Thales. Please enjoy. Put your hands together for this panel.
Thanks so much, Benedek, and it's my utmost pleasure to welcome this fantastic lineup of panelists. When we speak about tokenization and defining the next infrastructure, how markets should be operated, we are not discussing here digitalization of securities. We are discussing how capital markets may evolve, how assets are issued, traded, how settlement is going to happen, and how trust is engineered in the digitally native environment. What makes this conversation particularly important is that we have here participants from the ecosystem who are already building and shaping capital markets, how the new capital markets is going to look. And so today the question is not whether tokenization is possible. The question is how we design it in a way that it's interoperable, it's scalable, as well as it's responsible. Let's begin. Please, Lidia, introduce yourself, the company you represent, and how you're involved in tokenization today.
Thank you very much for having me today, and thank you for that introduction. My name is Lidia. I'm CEO at Seturion and BX Digital. Those are the two tokenized asset businesses of the Börse Stuttgart Group. We are actually running a settlement infrastructure. So Seturion is a pan-European settlement infrastructure which allows to settle tokenized assets. And BX Digital is the DLT exchange on top of it in Switzerland, meaning an exchange to trade and settle tokenized assets. I've been in the space for quite some time. I've been building digital assets businesses for the last 10 years. And what I'm seeing at the moment is very much a massive shift in terms of adoption, but happy to talk about that today.
Yeah, we're not talking about POCs and et cetera. We are talking about action in real time. Robert, would you like to go next, please?
Thank you. Hi, everyone. My name is Robert Oleschak. I work on tokenization since around 4 years. First at the BIS Innovation Hub, and since a little bit more than 1 year back at the SMB, where I lead Project 𝘪𝘰𝘬𝘦. In Project 𝘪𝘰𝘬𝘦, and we'll be talking about it in a minute in a little bit more detail, we are looking at how we can support the settlement in settlement money of tokenized assets.
Carlo?
Thank you. So good morning, everyone, and thanks for having me, and pleasure to be in such a great institutional panel with a lot of esteemed colleagues. I think we know each other very well. So I am the head of sales of 6 digital assets, little change from SDX, and I will tell you in a second why. So 6 is the financial market infrastructure of Switzerland. So we operate exchanges. I use the plural because SIX Group is also owning the Borsa Madrid. So we have also foot in the door in Europe, but we have also recently acquired an MTF infrastructure called Acquis. So we have an MTF in the UK. So clearly, our ambition is not just to be the Swiss infrastructure, but to become an European infrastructure. And of course, we do whatever you can possibly imagine about issuance. So in the blockchain space, we have been the world first, actually, regulated exchange and CSD operating on a DLD, so on blockchain already in 2021. So seems it's almost been the pleasure to participate in the project with the Assembly around the Swiss franc tokenization. And I can announce that we are on the verge of integrating the digital blockchain infrastructure into the main house. So it means that to the 𝘮𝘬𝘐 graph, we are going definitely on the end of the story. So, which means that we are waiting the FINMA approval by the end of March, probably, to merge the Web3 AG, which is the entity under which we operate the cryptocurrency custody, together with the CSD. Nothing new, because it's exactly what can happen in MiCAR in Europe. So we are adapting exactly what our competitors are doing. Point number one. But point number two, which is very interesting, I think, is the fact that we expect also to receive the approval to basically merge the two CSD by late spring. So looking at how hot are the days outside, late spring is very soon. So at that point in time, the idea is that you will have a key to multiple doors. You can access digital or traditional securities with digital or traditional services. That will be up to you, the market, to decide where you want to go. Thank you.
Rafael, please.
Thank you, Amy. I'm Rafael, part of the partnership development team within Franklin Templeton Digital Assets. As you heard Christian, Franklin Templeton started 10 years ago building on-chain, primarily proprietary infrastructure on public blockchain, and my focus has been helping traditional institutions integrate on-chain workflows, mainly for liquidity management, as well as bringing traditional and institutional grade products to fintechs, crypto foundation, and protocols.
Thanks so much. Let's take a step back and start at the basics. Why do we tokenize, Lidia? Is tokenization a distribution play, or are we reinventing the infrastructure? Why do we tokenize?
I see it very much as an efficiency operational play, as really an infrastructure play, much more than a distribution play. If you think what tokenization does, it's actually bringing the asset itself on the blockchain, meaning the asset itself gets digital for the first time in our history. So up to now, we might have had digital registry and the likes, but we didn't have an asset itself that's digital. So we can now move the asset from left to right in a digital form, meaning same way as I would send an email today, I can send an asset tomorrow. And that massively shifts how we handle assets. So you can actually make conditions on that asset. You can make transfers much more quicker. So still being in a T+2 environment today seems sometimes a bit absurd, in my opinion, in a digital age. But so you can shift that. You can go to an instant settlement regime, and you can do everything much cheaper. So if you compare it again to an email, I strongly believe that costs around transferring and settling assets will actually go down very, very much, maybe at some point even to zero. I don't know, but it will go down. So the massive costs we have today in settlement and post-trade, that's what we are trying to solve on one side. The distribution play, maybe just that as a last point, the distribution play, I understand it that most often would, especially within banks, that it would be the best if that would be the case, right? Because it's easier to sell cases within large institutions if it's a distribution play. You can add on to your revenues, you can extend your revenues, you can add new distribution channels. And I believe at some point that might be the case, but it's not the starting point of tokenization.
Rafael, do you want to chime in?
Yeah, the reality is that not all tokenization is made equal. Big part of the market is focusing on distribution only, and what it creates is that they have, in the example of funds, you can have a traditional fund, traditional transfer agent or shareholder registry, and they deciding to wrap that, create a digital twin on-chain. Now, by doing so, yes, you will have programmability, you will have some advantages, but in reality, the infrastructure has not changed, so you just have additional counterparty risk and additional operational risk and reconciliation risk that can be added. The importance of tokenization is within the infrastructure, And I believe today Franklin Templeton is still the only one to have an on-chain shareholder registry, so an on-chain transfer agents regulated. And when you have that, you've got two main improvements, two main benefits. Obviously, the first thing is that you've got an asset that is regulated as any traditional fund, that has no additional counterparty risk, no additional operational risk and reconciliation risk. But because it lives on-chain, you've got first a peer-to-peer instance transfer or real-time transfer. That's really important because when the transfer agent is on-chain and legally on-chain, then if I decide to send this money market fund to Bank B, Bank B is now owning Bank G legally, even if it's overnight, even if it's on the weekend, and that's instant. If the token itself was just a wrap, then legally the owner of the token is not the owner of the fund. And here you have a lot of reconciliation risk. The second big advantage of why we tokenize and why we started with money market funds. So obviously there is this peer-to-peer transfer with instant settlements 24/7. But then because blockchain at the end is just a way to better handle data, we've been able to cut and split the yields up to the second, which means that now you've got an asset that is yielding up to the second, and you're sure not to lose any second of minute of yield, even between when you have transfer within the day. So I think tokenization, why would we tokenize? First is improvements of the infrastructure, having an issuance that is shipless, having a compliance and a regulation that is that can better access the data and that is now more comfortable with the funds, and then also the investor. All of it at the end is for the investor to have a better asset and to use a better asset that he can have as usual.
Thanks so much, and we will dive later into who are these investors or who are the buyers of the money market funds. Robert, what is the role of the central bank in the era of tokenization?
So compared to the traditional systems, I believe that the role of central bank money in the tokenized world does not change. So it's really the same. And that is because central bank money is a risk-free and very liquid settlement asset, and that's independent of the technology that you are using. So given that, I think it's a natural use case for settling transactions between financial institutions where large values are involved. Now, we have been investing as central banks and also financial institutions since nearly 40 years in so-called real-time gross settlement systems. So those are large value payment systems that settle transactions between financial institutions. And these are highly containerized, straight-through processing systems. And just to give you kind of an idea, today in Switzerland, our RTGS system settles every day 4 million transactions and the worth of 200 billion Swiss francs. So this is really something that really is very highly efficient. However, when we look at DLTs, I think DLTs compared to RTGS offer new functions. That's one thing. And also, I think what is quite interesting is that you can put money and assets on the same platform, and which allows you, together with programmability, together with composability, many new features that you cannot have with the RTGS system. And that's why with Project 𝘮𝘬𝘮, we are not only looking into how we could support the settlement of tokenized assets in central bank money, but also we are supporting it in a production live environment. So with SDX, we are issuing wholesale central bank digital currencies on their platform. So SDX and the pilot banks that are participating in this can use central bank money to settle tokenized assets such as bonds or also equities. And also we have started a cooperation with BX Digital. BX Digital is looking into issuing tokenized assets on Ethereum. Maybe central banks are not yet ready to issue central bank money on Ethereum, so that's why we are looking into a RTGS link. The idea is that we synchronize the settlement of assets on Ethereum, and also the settlement of central bank money in our own very own RTGS system. We believe this is a journey. I think we are here trying to build new financial market infrastructures, and I believe that we can only learn and make the next steps when we really do it.
100%. Carlo, the next question goes to you. SIX sits at the heart of custody, settlement, clearing in Switzerland. And when you look at tokenized assets, do you see structural transformation or modernization? What is your view here?
Well, I will try to be a bit political. I think that when you do innovation in financial markets, sometimes you cannot have, as Elon Musk was saying, an unpredicted and rapid disassemblement of the vehicle, which is basically the rocket is exploding. So in financial market, that's not good. So I think that is like a chair. To stand still, you need more than one leg. So one leg is surely the infrastructure, but we need also the banks. We need a clear regulatory framework. And of course, which puts the last, but probably is the first, is the client. So what does the market want? So it's just thinking about all these three together that you can really advance and create value. And to come back to the question is, with that in mind, is that there is not the one-size-fits-all solution. So we need, of course, to maintain the market as it is today, because tomorrow you cannot go on, given there are so many bankers, you cannot go on your screen and then suddenly it's black. So it should work as it is today. And at the same time, we are trying to make it more efficient. And as Lidia said, most often than not, this is happening where you don't see it. And sometimes it's good not to expose to you all this complexity. But the matter of fact is that the system in the background is becoming much more lean and efficient. So where we can, definitely we are pushing a bit the boundaries to get to really transformational changes wherever possible. I mean, crypto per se is a transformational change. It was not there before. Was born in the peer-to-peer private market and now is going into the institutional side. And we are trying to build it as institutional as it can be within SIX, within the exchange. So it's a combination of both factors. But I tend to, again, say that tokenization per se, as Rafael has mentioned, is not just the end. It's just a tool. Then how you want to use the tool, and I say you want as a market to use the tool, is still to be seen, and we are still discovering a lot on what's possible now and what can be really scalable.
Thank you for sharing. So then coming back to what was a bit touched on already, Lidia, are we building parallel rails? What is the innovation here when it comes to trade and post-trade? Can you add to that a bit more?
Yes, so we strongly believe that trading in itself is very efficient today already. So there might be a future where trading on the blockchain makes absolute sense, and also bringing trading and post-trading together on the blockchain. However, looking at the point where we are at now, we see the biggest efficiency gains in post-trading, meaning settlement as an example. We also see a shift on how post-trading, in terms of like how it's set up, is actually going to be changed. Meaning we don't need someone having central custody anymore. As said, we can now transfer the asset peer-to-peer as we would send an email. So as we don't need the post office anymore, we might not need the Central Securities Depository, the CSD, anymore for actually doing central custody of the asset. Obviously, there's a lot more in post-trading than just the custody element. So you have the settlement process where someone has to orchestrate asset versus cash delivery, so DVP, delivery versus payment. And that is something that still exists, but that putting on the blockchain is much more efficient. So how we did it and how we envisioned the future to be is actually that in settlement, in post-trading, we have the new part, the settlement part on the blockchain. So as an example, in Europe, we built a pan-European settlement platform where the trading venues that exist today can connect. meaning any traditional exchange that runs on traditional rails, doesn't need to be on the blockchain, can connect to Seturion as a pan-European settlement platform. And simply by connecting to the settlement platform, they are then able to trade tokenized securities. Because trading tokenized securities is actually, or trading in general, is actually just trading an ISIN number. The trading system doesn't care whether it's a tokenized asset or a traditional asset. It can trade any ISIN. So you can keep the trading system as it is. You simply have to change post-trading. And that obviously then leads to a shift in how the post-trade infrastructure might look like. I said the CSD might not be required anymore. The wallet infrastructure could actually be run by banks, and we can settle transactions between the banks directly. So we have a massive shift in terms of which role is being taken care of by whom. It's not just a new technology and we implement it and then we have it. It's really, we have to think differently on how those roles might look like in the future.
Thanks so much. That's a fantastic breakdown of how some functions are not being needed anymore. Is there something what you want to add, Rafael?
Well, I think indeed, if you're looking to tokenization and something that will be here in 10 years, you have to transform the actual infrastructure, not to build something just in parallel. So yeah, that's all about transforming what we have now.
Thank you. My next question, oh, Robert, please.
Can I add something? I think the question was whether we are building parallel rails or how these tokenized and the traditional world will interact. So I believe that that with settlement and custody on chain, you basically have built an infrastructure that is always on 24/7 and potentially the reach is global. So I think that the implication for how trading is done today, what the role of financial market infrastructures are, what the role of investors and the banks are, I think will also change. And I completely agree with that. I think there will be some role maybe for CSDs. Let's see. So let's maybe make a bet on that, because I believe that even with self-custody, there are some services that CSDs might offer in the future. So let's see on that. But I think that everything will change, and especially I believe that there will not be one DLT, there will be several DLTs, and I think so it will be about interoperability between the traditional system, DLTs, and in between DLTs. So I think in the future, the system might be more complex and require a lot of interoperability, so we need to really deeply think about that, and we also need to think about measures how to avoid liquidity fragmentation in the future.
Such a good point. Liquidity is the number one thing we think about at Talos, so I absolutely agree with you. I would love to address this question to you, Rafael. Christian mentioned that Franklin Templeton has tokenized, or as in tokenized MMFs, money market funds, in the US, in Hong Kong, in Singapore, in Luxembourg. Can you tell us a bit who are buying these MMFs and what are the use cases?
Yes, so as of today, the fund has raised across those 4 jurisdictions more than 1.3 billion USD. It all started with customers that were not the usual customers of Franklin Templeton. So we first had fintechs, crypto foundation, stablecoin issuer using 𝘮𝘰 as a reserve asset. We then had some VCs in the US, first buying 𝘮𝘰 before investing in their protocols, and later even subscribing into deals with 𝘮𝘰 via an instant ownership transfer in order to avoid any loss or any way to lose any yields when they subscribe a deal. From that, we had the second wave of customers that were more hedge funds, market makers, and that mainly was pushed by our collateral mirroring program, the fact to use 𝘮𝘰 as a collateral on exchanges like Binance, like OKX, and we had already some requests to use those 𝘮𝘰 as collateral on traditional exchanges. For them, especially for market makers with OTC desk, we're starting to see the creation of an OTC market on 𝘵𝘰, where you've got customers that instead of buying 𝘵𝘰 through the primary markets, they decide to send stablecoin or even Bitcoin to the market maker and then receive 𝘵𝘰. All of that via peer-to-peer transfer. Now, I think we're on the third wave. We've got some early adopters within traditional institutions. Some state-owned institutions have started to invest into 𝘵𝘰, but also banks. I think regarding the traditional side of finance and these institutions, the corporates, the missing part is the integration for them of wallets. For them having the possibility to use blockchain, to have a wallet. And I think that's where banks are so important. We have a lot of corporates that are willing to buy our funds, use it for settlement, for trade finance, but they want to do so via a bank. And I think that's where the bank has a role to play. They can manage the custody, they can help corporates access those funds, and then be the liquidity hub for 𝘵𝘰, which is 𝘵𝘰 is our money market fund.
Thank you. We mentioned fragmentation, Robert, and liquidity. So fragmentation is absolutely a big concern. Multiple blockchains, multiple standards, multiple settlement assets. Who is responsible for ensuring interoperability? The regulator? Is the infrastructure provider or market demand? How were we, like, who decides? What do you think?
I think that's a tough one, especially since we are looking at a very early and very dynamic market. So setting up standards too early might maybe also kill competition or new ideas. So I think we need to be careful on that. Generally,
competition is good,
yes,
right? I mean.
Yes, of course. Yeah, so you don't want to kill that by setting too early standards and not allow new ideas. So I think that's important. So when I think about liquidity or avoiding liquidity fragmentation, then I see markets, right? And markets, you need several players to come together. So you have investors, you have issuers, you have banks or financial institutions more generally, and then you have maybe central banks who provide the settlement asset, and then you have regulators. So how do you bring all these interests and different views together? And I believe governance is one important word that you really need to think about. So how do you want to build financial market infrastructures of the future, where all the parties sit at the table and decide together what is right and how we want to move, and what kind of standards and what kind of interoperability do we want to have. So that's why I think financial market infrastructures and the governance are very, very important as a building block for that.
Thank you. Carlo, a follow-up to that, maybe. How do you assess the regulatory landscape in Switzerland towards tokenization?
Well, I think that, as we have seen this morning, Switzerland has been for quite some time ahead of the game. We are witnessing, matter of fact, that US are speeding up, so they have changed gears. So would be good to, do it in the Swiss way, slowly and surely, but not too slowly either. So I think that there are some, let's say, some discussion even happening, and even together, Rafael, because, for example, in Switzerland, we cannot have money market funds because we cannot have a constant NAV. So there are little tweaks in the Swiss regulation that are not allowing innovation as we speak. So not very complicated on paper. But until the moment you will not get this done, you cannot have a money market funds in Switzerland. So that's a lot of things that is happening in the background, but you need to imagine that is not just red carpet everywhere, also in Switzerland. So on that side, I can just say that we would love to see a bit more risk-taking on that front, on the digital side, because we think that the time is mature, technology is mature enough, and in terms of liquidity, and not just to bring the water to my mill, as we say in Italian, but I think that to point of CSD that are needed or not is also a matter of trust, is a matter of risk mitigation, is a matter of who do you trust to do what. Sometimes, as say today, sometimes you cannot basically give certain activity to someone else, so you cannot delegate. But in other cases, you should, without saying the must, but you should delegate, because there is maybe a better way to do it, less risky or more efficient, or a combination of both. So the point is always to be a little bit open-minded. And to conclude about Ireland, and again, thinking about the US and trading, every US exchange want to move to 24/7. Good or bad, I'm not sure that the regulator will approve to go 24/7 because there are some risk. We have seen, unfortunately, these days the markets in the Middle East are closed for a very good reason. So imagine a security market open 24/7 as we speak. Actually, the full impact, or a big impact, was happening on the crypto market because it was open on the weekend, and maybe it was not that good. So that aside, net of that, in terms of interoperability, to again plug on what just said, we do interoperability since at least 3 years. So we can move assets from traditional to digital in the 6 environments, so we can transfer assets in and out, tokenize or detokenize as will, whatever you want, since 3 years. So I see that in the audience there was Paolo Bortolin, so he knows very well the Lugano bond and what we can do on the digital assets. So when we have seen the news that DTCC again is the biggest CSD on planet, so I launch a quick question. You know what is the total market cap of crypto today? Rafael?
Slow.
Yeah, well, 3 trillion. Probably
Closer to 2.
Closer to 2 recently, yes. 2 trillion. DTCC is holding 100 trillion of assets. Is 50 times the total market cap of crypto. So they want to tokenize everything they have there. So think also about what is the potential impact of providing to the market the tools to be more efficient. Because digital assets, by definition, as said before, are surely more efficient because programmability, because instant settlement. So there is a lot of things you can do with these assets. So at some point, the market will decide the way forward. And as infrastructure, we need to basically end all them in that direction without preventing innovation. So also for us, in 6, we are not closing the door to interoperability. On the contrary, we want to be as interoperable as possible. And sometimes when you do interoperability, actually, you don't move assets. Just to break maybe a legend, but about crypto, sometimes you transfer the assets. But recently, we realized that it's better to mirror the assets and don't move the assets because you cannot be hacked. And there is more efficiency sometimes is not in not moving the assets, but to have a trusted custodian that have your assets somewhere. So there is not, that's not the only way, but there are different ways to use the same technology.
Thanks so much, Carlo. Before we move to the closing question, I would love to hear your take, Lidia, because BX Digital is an affiliate of Börse Stuttgart. What is the perspective in the EU on tokenization?
So in Europe, or specifically in the European Union, you have the big vision of having one capital market union. However, the reality is you have, for every member state, you have a different CSD. They might be belonging to a certain CSD or exchange group, but still they are organized in a national way. Meaning that if you want to transfer assets in today's system across the European Union, it's very complex, it's very costly. So this fragmented post-trade infrastructure in Europe is one of the biggest issues for Europe currently, or for the EU specifically, to actually generate this European capital market union. So the idea of having one post-trade infrastructure across the borders is actually one that resonates very well in Europe, meaning that they want to go into that direction, right? They want to move away from the national silos, which, by the way, are most often also monopolies, right? So not only it's complex, the costs are also, you're dependent on monopolies. Now, the biggest hurdle there is that this post-trade infrastructure is being run by large institutions, obviously. And the 𝘮𝘀 Stuttgart group said very early on, we want to be an innovative player. Interestingly enough, they are the 6th largest European exchange group, but we are the largest European exchange group without a CSD business. So we are actually the one which might be willing to think it in a disruptive way. Doesn't mean that the others aren't disruptive. They are very disruptive and they have very disruptive projects, and that's good like that. But actually going the extra mile and say, okay, let's think it on a clean sheet. Like, how would we structure it? How would we structure the infrastructure if you don't have to lose anything? And that's what we are trying to do as a 𝘮𝘀 Stuttgart group on a European play. In Switzerland, the things are a bit different. If you only look at Switzerland, we obviously have one CSD, which makes it much easier. Imagine we would have, although it's on a much lower level, but imagine we would have a CSD per every canton. And that would make it obviously very difficult. So here in Switzerland, with SIS, we are much more on this already consolidated basis as opposed to the European Union.
Rafael,
if I
thank you,
may
Lidia.
add something related to silos and to regulation. Indeed, when I discussed about our money market fund, so you can send it peer-to-peer, and the idea was how can we make that possible for corporates that is in Switzerland to be able to buy it and send it in Luxembourg, in France, but also in Hong Kong. And the idea was that indeed, instead of launching a fund regulated by the FINMA, we started to launch a fund regulated by the CSSF regulator in Luxembourg. And the idea was that now that this fund is UCITS, a customer now can buy this fund as it was traditional funds, but also buy it from Switzerland. So this idea of not launching in Switzerland was also to avoid any silos and have one fund available in several countries and also available to send cross-border.
Thanks so much. We arrived to the last question. We've seen proof of concept, first issuances. What do we need in order to achieve scale and to not differentiate? Maybe in 10 years, there won't be the concept of traditional assets and tokenized assets. What do we need to scale? A quick rapid fire from right to left. Rafael, you want to start?
Yes, that's a difficult question to end this panel. I think if we want really to have scale, we've got to build something that is truly better than what we have traditionally. And that's what we're trying to do, not only having, let's say, only the distribution side, only one part of what blockchain can help us to do. The idea is that if you want to scale, we really got to change the whole infrastructure and create something that is, for the end investor, for the one that matters, truly better.
Thanks so much. Carlo?
Yeah, one word. I think that for scalability, we should start to think that we cannot conquer the planet alone, so the more the merrier. For me, that's really the point. So as much as they are also competitors, but as much as other countries, other CSD, other provider, other banks, institution will get on the digital way, the better will be, because at some point it's a scale game, it's a network game. Blockchain is a network by definition, so you cannot scale without more people playing the game. I think time is come to start to play the game of blockchain.
2 points on my side. So we are in production, meaning if you are an asset issuer, you can list the asset with BX Digital. If you are a bank, you can start onboarding as trading participant at BX Digital and go into production together with us. We are going to go live with the exchange very soon. So production is here. Now, a bit more on the broader note, I think it also needs patience. I looked up the numbers before this panel. In the US, they introduced electronic registries in like '73. They had like 50% of the assets being in electronic form by end of the 80s. So it took like roughly 15 years to actually move on to new tech rails. And we are now at roughly like 1% still being in physical certificates 50 years later. So it takes time. We are shifting infrastructure here. I hope it doesn't take another 50 years, but still, it might take another 10 years actually until we move the majority of the assets on tokenized rails.
Thanks so much, Lidia. Robert?
So I believe scalability is not anymore about technology. It's about the business model. I think that's important because at the beginning, when we started the journey, I think there was a lot of talk about technology, and that has gone. So that's really great to hear. And I think we need to solve three issues when we talk about, or at least from a central bank perspective. So we need to solve interoperability, because I believe there will be several DLTs around. They need to be interoperable. We need to solve the issue of liquidity fragmentation. So how do we bring markets together where people can trade between each other, where institutions can trade between each other? And we also need to solve governance. So how do we make sure that the interests of all parties involved are taken care of, and then actually we are in a position of building amazing infrastructures in the future?
Thank you so much, dear audience. You heard that the risk is that we may move too slowly, or that we rebuild the past instead of architecting the future. The institutions that commit to interoperable standards, scalable settlement models, and real capital deployment will shape the global markets, will shape how the global markets operate in the next generations. So in 10 years, we may not speak about tokenized assets, or not 10, maybe 20 years, but all assets are going to run on-chain. The question is really, who will have helped define it? Thank you. Please put your hands together for this fantastic line of panel.